Good morning, everyone. Welcome back to Morning Markets, the final episode of the week. It's also a week that probably has marked 3 months from working remotely away from the office. I hope you've enjoyed the content that we've been producing over that period. And please, if you do have any feedback, just drop us a note and let us know what we could do differently. Just also wanted to think about the framework that we've been using to think about markets in this environment and what's been driving sentiment. And that particularly revolves around 4 and 5 factors that we've been looking at. Those 4 factors initially were around the fiscal support, monetary support, thinking about COVID-19, and then economies reopening and by inference how businesses would reopen. And then to that we've added the political risk dynamic and how political risk is influencing markets. And by that I mean Brexit negotiations, the trade discussions between China and the US and Europe, for example. All those factors are influencing market sentiment. And in the past week, we've seen market sentiment refocus on one of those, and that being COVID-19, as we've seen rising infection rates in a number of US states, Germany and China. And I think that's an important point for us all to think about, because ultimately that will continue to be with us for a long period of time until we find a medical answer. And that will influence how we as consumers behave, and by inference then how economies reopen and how businesses react to this ongoing and evolving environment. Something that we'll all have to consider and think about over the coming months. I wanted then to look at just what's been happening in asset markets over the past 24 hours. What have we seen there? Well, we saw an improvement in equity markets yesterday, both in the UK and Europe, and then in the US we had a bit of a stronger performance there, and that was driven by some regulatory change as it related to the financial businesses, and we saw financial shares lead the market during the market yesterday. Also interesting to note just been what's been happening in sovereign bond markets in particular. We saw yields in the US 10-year come in a little bit to 0.68. And then in the UK we saw quite a strong performance in gilts yesterday, with the 10-year gilt yield coming in to 0.15%. And I think just looking at some charts this morning, that looks to be the lowest level that the 10-year has traded at. Looking at some of possible reasons for that, it's difficult actually this morning. I think one of the things that we could say is maybe there was a slight move to some safer haven assets, which clearly UK gilts fall into that bucket at this point in time. We also saw both the 2 and the 5-year gilt trade on negative yields yesterday, and they continue to do so this morning. Looking through into Asia, we saw Asian markets follow the US lead, and they have had a positive performance from the equity market. Currencies, commodities, not a lot of change over the past 24 hours. Yesterday we touched on the dynamics of unemployment in the US and that we would get an initial claims number. Again, that continues to show an improvement, so a falling number of weekly initial claims. Still remains elevated at 1.48 million, but the decline is continuing to be evident, and that's as we see businesses reopen and we see the US companies start to rehire. I also mentioned yesterday the Fed bank stress tests in the US, and that came after the market, and I suppose it's interesting to reflect on regulation. I said previously that regulation had been changed in a supportive way and bank shares had performed well during the market. After the market with the stress test, and what did we get? Well, we heard from the Fed that they would be looking to curtail both dividend payments by financial businesses and also share buybacks for the remainder of this year at the least. And what did that mean? It saw those shares fall in the aftermarket, so the gains that they made during the day were eroded in the afternoon, after the market had closed. So again, just comparing and contrasting different regulatory environments and different regulatory outcomes. In terms of the day ahead, it's relatively quiet from an economic standpoint. We will hear from the ECB President Christine Lagarde later on this morning, so that will be an interesting point just to see what she is focusing on in that discussion today. Many thanks for joining us this week. I look forward to seeing you again next week.